Award for Best Paper in Advanced Accountancy in CA Inter exam. Present activities: practicing as a chartered accountant since last 17 years in the field of direct taxes, litigation, consultancy, and transfer pricing. Got Best Lecturer Award from Sales Tax Practitioners Association, Mumbai, for delivering lecture on impact of Hawala purchases on income tax assessment in the year 2014. Involved in teaching the subject of direct taxes in CA final students. Present member of Journal Committee of Bombay Chartered Accountants Society. He is also a convener of Law and Representative Committee of the Chamber of Tax Consultant. He is a faculty in certificate course for taxation of cooperative societies organized by ICI at Kolkata, Bangalore, and Hubli. He is a faculty in webcast on taxation of cooperative societies organized by ICI. He is also a co-author of the book Recovery of Taxes, published by Chamber of Tax Consultants. He is a regular contributing articles in professional magazines like BCA Journal, Income Tax Review, Taxman's Corporate Professional Today, and CCH Direct Tax Online, Outlook, Money, etc. Regularly delivering lectures at various study circles and professional seminars. Conduct several programs on compensation structuring for Bombay Bombay Chamber of Commerce. With this, I'll give the dais to Devendra. Before that, I'll give a memento as a mark of our respect for him. Yours.
Good evening, everybody. Thanks, Ashokji, for the kind introduction. The topic which I am going to take today, revision proceeding under section 263 and section 264. These are as such totally two different kinds of proceedings, though both are a kind of revision proceedings. Section 263 is a revision of orders which are prejudicial to the interest of revenue, and section 264 is titled as revision of other orders. So they operate all together in different fields. Both these revision powers are entrusted with the Commissioner of Income Tax, now also christened as Principal Commissioner of Income Tax. Now, if we see the total scheme of assessment under the income tax, after filing of return by the assessee, normally the returns are processed under section 143(1). In some cases, returns are taken in scrutiny under section 143(2), and orders are passed under 143(3). Thereafter, in some cases where there is some escapement of income, he has reason to believe in view of some tangible material that there is some escapement of income, then he has the power to reassess the escaped income under section 147. In case of a non-cooperation by the assessee in either attending the assessment or the reassessment proceeding, he has the power to complete the assessment to the best of his judgment under section 144. Now, these are the basic assessment proceedings of might be either a normal scrutiny assessment or a reassessment or a best judgment assessment. Now, against these assessment proceedings, which are normally undertaken by an assessing officer, there is an appellate hierarchy or appellate mechanism provided under the Income Tax Act at 4 different levels, starting from CIT appeal, ITAT, High Court, and Supreme Court. Now, apart from this appellate mechanism, these two sections, section 263 and 264, which in fact do not directly come in the purview of the nomenclature of appellate proceedings. These are revision proceedings, but in a way, as we will later see in our discussion, in a way some of these might be akin to or taken as a similar to an appellate mechanism. However, these are actually administrative powers given to the Commissioner of Income Tax. If we see the definition of assessing officer in the Income Tax Act, there are various hierarchies of assessing officer. The lowest assessing officer is income tax officer, and the highest assessing officer is additional commissioner of income tax, and in some ranges joint commissioner of income tax. Commissioner of income tax is not included in the definition of assessing officer. So it simply means that a commissioner cannot carry out any assessment, nor can he technically interfere in any assessment proceeding. Though he is the administrative head of the entire department, but he cannot carry out any interference in the assessment proceedings. There are statutory sections, say section 144A, in which there are specific powers given to the joint CIT. Then he can call for and examine the record of any proceeding in which a pending assessment is going on, and there he can issue some directions which are binding on the AO. However, CIT doesn't have any such power to interfere in the assessment proceeding, and therefore to have a check on the assessment done by the assessing officer, the Income Tax Act legislation has introduced these two sections in the Income Tax Act, section 263 and section 264, which gives the powers to the commissioner and the principal commissioner to revise the assessment orders. So these are not appellate powers, these are administrative powers. And what do they do in these two sections are, they revise the assessment orders or some other orders passed by the lower authorities. Now, the first section, section 263, which is titled as Revision of Orders Prejudicial to the Interest of Revenue. And section 264 is titled as Revision of Other Orders. So it simply means that an order which is prejudicial to the interest of revenue, that is, an order which has been passed by assessing officer, where the interest of revenue, that is the income tax department, that is the government, has suffered adversely, their commissioner has the power to revise that order. Now, as a matter of common sense, as all tax practitioners or students might be aware, under the Income Tax Act, the right of first appeal, for obvious reasons, always lies with the assessee, because it is the department which undertakes the assessment, and therefore there cannot be any question of department or the assessing officer himself feeling aggrieved by his own orders and filing an appeal. And therefore, the first appeal to Commissioner of Income Tax Appeal is always by the assessee. No doubt, thereafter, once the Commissioner Appeal decides the assessment either in the favor of the assessee or against the assessee, now both the parties, either the AO or the assessee, have a right to further appeal to the tribunal. However, as the first appeal emanates from the assessment order, that right is entrusted only to the assessee. And therefore, naturally, there has to be some mechanism with the department that where the assessment has been done, which is against the interest of the government or the revenue, there has to be some mechanism to set it right. Now, AO himself has some power under section 147. If the conditions of section 147, as held in so many decisions of Supreme Court about tangible material, fresh information, etc., are fulfilled, then AO himself can set right the assessment which was against the interest of the revenue. However, section 263 gives a special power to the commissioner to revise the orders which are prejudicial to the interest of revenue. So any unfavorable order which is unfavorable to the department can be set aside by the commissioner by invoking his revisional power under section 263. The next section 264, which talks about revision of other orders. So revision of other orders simply means an order which is not prejudicial to the interest of revenue. If an order is not prejudicial to the interest of revenue, it would mean it is prejudicial to the interest of the assessee. An order which is prejudicial to the interest of the assessee, so if the assessee is agreed by that order, he has an alternate remedy under section 246A to file an appeal to the Commissioner Income Tax Appeal. However, 246A operates in its specified field, and there can be some situation where either an order is not appealable under section 246A, or even though it is appealable under section 246A, but because of time limit or some other defect, assessee has missed the bus and therefore appeal cannot be filed to Commissioner of Income Tax Appeal under section 246A. Such orders can be subject matter of revision under section 264. So this was just giving a brief idea about what these two sections are about. Section 263, because this deals with orders which are prejudicial to the interest of revenue. In a simple or a layman's language, we can say that the order which is subject matter of revision under section 263, the input order, which is the subject matter of revision, is against the department, and if the commissioner revises it under section 263, the output or the order which will emanate from that revision proceeding, which will naturally go against the assessee, because it is revision of the order which is already against the department. If it is revised, the outcome will be in favor of the department. However, because section 264 is for revision of other orders, that is the order which are against the interest of the assessee, if that order is revised by invoking the powers under section 264, the outcome of that revision proceeding will be in favor of the assessee. So in simplest word, we can say that section 263 is a weapon in the hands of the commissioner to set at right erroneous orders which have gone against the interest of the department. At the same time, the same commissioner has powers under section 264 to set at right any assessment which has gone against the assessee and thereby causing hardship to the assessee. Now, with this brief introduction of the outline of section 263 and 264, let us proceed further in section 263. Now, section 263 is a very elaborate and practically speaking very often used by the commissioner for revising the assessment order or the reassessment order passed by the AO. And 264 for certain practical reasons is not that often used the remedy by the assessee. We'll see in our discussion why is that section 264 is not that much often used by the assessee. So practically speaking, section 263 is of more relevance or more often seen, whereas section 264 is not that much practically used, and therefore the various nitty-gritties or the controversies in section 263 are more in number than section 264. Various tribunals, High Court, Supreme Court have more occasion to deal with orders under section 263 and very little occasion to deal with orders under section 264, and therefore even in my presentation my focus would be more on section 263. So more time will be devoted to section 263 and then some part will devote to section 264. This is a very lengthy presentation. I'll try to cover as far as possible, but if due to paucity of time we are not able to touch all the slides in this, I may skip some of the slides and give emphasis on the more important ones. Now in the initial part of this presentation, what we have is I have outlined what are the main legal provisions of section 263, and thereafter in the further slides we have an analysis of each and every part in a more detailed manner. So at a macro level, if we see section 263, the principal CIT or CIT, he has got the power to call for and examine the record of any proceeding under the Act, and thereafter he may pass the order for revision if the order passed by the AO is erroneous insofar as it is prejudicial to the interest of revenue. Before passing any such order, an opportunity of hearing is to be granted to the assessee to comply with the principles of natural justice. In the course of revision proceeding, CIT may make or cause to be made such inquiry as may be deemed necessary. And finally, the outcome of the revision order, it can be three different kinds of directions given by the CIT. Either it may result into enhancing the assessment, or it may result into modifying the assessment, or it may result into cancelling the assessment and directing a fresh assessment. So at a macro level, if we see the various ingredients of section 263, first of all, CIT has the power to call for and examine the record of any proceeding in which an order has already been passed by the AO. So this is in a way different from section say 144A, whereas JCIT has a power, similar power you can say, but in section 144A, JCIT can call for and examine the record of any pending proceeding where order is yet to be passed and then issue any direction which will be binding on the AO. However, section 263 is in a way a post-mortem of the proceeding which has already been done. So you can call for and examine the record of a proceeding where an order has already been passed by the AO. Then before invoking his jurisdiction, the twin conditions to be fulfilled is the order passed by the AO has to be erroneous as well as prejudicial to the interest of remain. If these twin conditions are fulfilled, then after giving opportunity to the assessee and after either himself making or either causing the AO to make such inquiry as he may deem necessary, he can pass a revision order enhancing the assessment. Why enhancing the assessment? Because as I said earlier, the input of section 263 is an order which is prejudicial to the interest of revenue, and therefore to set it right, because the order is erroneous, the CIT may enhance the assessment. He may also modify the assessment. Now the first and the second part, enhancing the assessment and modifying the assessment, it might be a little bit looked to be differently, but they in fact operate in different scenarios. Enhancing the assessment can take place in a scenario where an assessment order has been passed. Modifying the assessment can be in a scenario where, say for example, some elaborate inquiries are to be done or some other directions are given by the CIT. So it may not directly result in enhancing the assessment, but modifying the assessment, and lastly cancelling the assessment and directing a fresh assessment. In our later discussion, we'll pay more emphasis on all these three types of orders by the CIT. But at a macro level, these are the requirement of section 263. So only after an proceeding is completed, order has been passed by the AO, CIT can interfere and invoke his revisional jurisdiction. Now the explanation to section 263 defines the order, which includes even orders passed by the AO either with the direction of joint CIT, or an order passed by assistant CIT or deputy CIT, or even an order which is passed by a joint CIT acting in the capacity of the AO. Secondly, as the section requires that CIT can call for and examine the record of the proceeding, the word record has also been defined in an inclusive manner to include all record relating to the proceeding which is available at the time of examination by the principal CIT or CIT. So record need not necessarily be restricted to the record as was available at the time of passing of the order. Each and every record which is available at the time of filing, at the time of invoking this jurisdiction by principal CIT or CIT, all those records can be taken into account by the CIT for invoking this revisional jurisdiction. Then if the order is subject to an appeal, so the order which has been passed by the AO, already if it is subject to an appeal, then powers under section 263, it shall extend to such matter as had not been considered and decided in such appeal. It simply means that because an order has already been subject matter of an appeal, and as I explained to you earlier, the first appeal lies to CIT appeal. Now the CIT appeal and principal CIT or CIT, they rank at an equal hierarchy in the income tax authorities under the Income Tax Act. So it is not that CIT is having a superior position than CIT appeal. CIT appeal and CIT, because they rank on the same level, and therefore the judicial discipline says that once an order is subject matter of appeal or examination by an officer who is of the same hierarchy, that is CIT appeal, that part cannot be subject matter of revision proceeding by the CIT, because they both of these authorities rank at the same level in the hierarchy of the income tax authorities. However, there is a little catch in that, dealing with doctrine of partial merger and doctrine of total merger, which I will deal with at length in my later part of my lecture. Time limit for exercising this revision jurisdiction is 2 years from the end of the financial year in which the order sought to be revised was passed. So normally, the assessment proceeding earlier were time barring in the month of March. We have seen so many changes in the completion of assessment proceeding. Earlier the time limit was 2 years from the end of the assessment year, then later they reduced it to 21 months from the end of the assessment year. So be that as it may be, whenever the assessment order is passed from the end of that financial year, 2 years time limit is there for the CIT to complete the revision and pass the order. Mind it, this is not the time limit for issuing a show cause notice. If we compare it at a macro level with the reassessment proceeding under section 147, in section 147 there are different time limits set, firstly for initiating the reassessment proceeding, and thereafter once the reassessment is initiated, there are separate time limits for completing the reassessment which has been initiated. However, in section 263 there is only one time limit, and that is the time limit for completing the revision proceeding, that is passing the revision order. So 2 years from the end of the financial year. Further, it is also provided that where revision is to be done in consequence of or to give effect to any finding or decision in an order of tribunal, high court or supreme court, then the above time limit doesn't apply, and then in that scenario revision order can be passed at any time. Then in calculating this time limit of 2 years, certain time limits which are to be excluded are: one is the time taken in giving opportunity to the assessee of being reheard under section 129, and secondly, a period during which proceeding under this section is stayed by an order or injunction of any court. Now, what is this section 129, the time limit for giving opportunity of reheard to the assessee? Very briefly, I'll point out what this happens is, suppose Mr. X is the commissioner who issues a show cause notice under section 263, and suppose 1 or 2 hearing takes place and assessee or his representative explain his case. Now, before the revision order is passed, suppose that Mr. X at CIT is transferred to some other post and there is a successor, Mr. Y, coming to his jurisdiction. So, section 129 to protect the rights of the assessee provides that whenever there is a change in office from one person to another person, the succeeding person can continue the proceeding where it was left by the preceding officer. However, to provide natural justice to the assessee, it is provided that assessee has a right to seek an opportunity of reheard, because in the previous proceeding before the previous hearing before the earlier officer, he might have explained his case orally, supported with a written submission, and therefore to explain the same thing to other officer, he has a right to ask for an opportunity of reheard whenever the officer or the CIT changes. And therefore, whenever assessee exercises that right, the time taken in giving that opportunity of reheard to the assessee is excluded in calculating this time limit. Similar provision is actually even found in section 153, which deals with the time limit for completion of assessment. And secondly, in the course of in the course of revision proceeding, if the assessee files a writ petition before High Court and High Court grants any stay order, granting stay against the revision proceeding, and thereafter suppose that stay is vacated, the time lost in this intervening period has to be excluded. Now, the crux of section 263 can be found in the phrase an order which is prejudicial to the interest of revenue as well as erroneous. We'll see in the later part of our discussion, there are so many High Court and Supreme Court decisions dealing with this expression as to what is an order which is erroneous and what is an order which is prejudicial to the interest of revenue. However, though this section 263 has been there in the Income Tax Act since its inception in 1961, this expression erroneous and prejudicial to the interest of revenue was not defined, and therefore judiciary has interpreted it in so many decisions, and the law as to what is an erroneous and prejudicial to the interest of revenue is more or less settled. However, Finance Act 2015 came out with an explanation in section 263. Existing explanation was renumbered as explanation 1, and second explanation was inserted with effect on 1st of June 2015. Now, this explanation can in fact open a Pandora box of litigation. How, that we'll see in later part of my discussion. What this explanation trying to say is, in a way, it is trying to define as to which order is erroneous and prejudicial to the interest of revenue. It is in fact creating a deeming fiction that order of AO shall be deemed to be erroneous so far as it is prejudicial to the interest of revenue if, in the opinion of the principal commissioner or the commissioner, the order is either A or B or C or D. So 4 different situations are given. If the order passed by the AO falls in any of these 4 situations, then it shall be deemed that the order is erroneous and prejudicial to the interest of revenue. What are these situations? Situation number 1 is, then order is passed without making inquiries or verification which should have been made. Secondly, order is passed allowing any relief without inquiring into the claim. Thirdly, the order is not in accordance with any order, direction or instruction issued by CBDT. And lastly, the order is not in accordance with any decision which is prejudicial to the assessee which is rendered by jurisdictional high court or Supreme Court, either in the case of the assessee or any other person. Now, these four different situations are not cumulative in nature. These are alternate in nature, and therefore, if the order is passed by the officer, if it falls in any of these four situations, then it shall be deemed to be erroneous. In other words, it can also be put it like that: an order to be not caught in explanation 2 has to negatively fulfill all these four conditions cumulatively. That means there has to be proper inquiry or verification. If any claim is made for any relief, then that should have been inquired. All the CBDT orders, directions, instruction should have been followed by the assessing officer, and the order should not be in violation or contradiction with any jurisdictional high court or Supreme Court decision, either in the assessee's own case or any other case. If the order is caught in any of these four parameters, then order shall be deemed to be erroneous and prejudicial to the interest of revenue. We'll deal with the existing law or the existing judicial understanding or interpretation of what is an order erroneous and prejudicial to the interest of revenue, and how those existing interpretation can be affected by way of insertion of this explanation in my further discussion. Issues emanating from explanation 2. The fourth parameter which was there for considering an order to be erroneous was that any decision of jurisdictional high court or Supreme Court is not being followed. So there can be issues like, what if there is a subsequent decision of same high court which has overruled the earlier decision? In other words, where suppose an order has been passed considering one particular decision of a high court, however, a subsequent decision of same high court has overruled the earlier decision. So can the CIT say that the order which has been passed is not in accordance with the decision of the subsequent decision of the high court and therefore it is erroneous? A second situation could be, if some other high court or larger bench of other high court has taken a contrary view after considering the view of the high court which has been followed by the officer. Thirdly, there can be a scenario, what if the decision of the high court is received after completing the assessment order? In a way, these parameters without explanation 2, because explanation 2 has been inserted recently, such situation had earlier on many occasions come to the judiciary as to whether in these three different situations and also in some other situation, whether an order can be said to be erroneous or not. This one decision of GM Mittal Stainless Steel reported in 263 ITR decision. In this decision, what had happened was, at the time of completion of assessment, there was a high court decision which was in favor of the assessee, and therefore order was passed considering that high court decision. Subsequently, that high court decision was reversed by the Supreme Court. And on that basis, CIT invoked his revisional jurisdiction under section 263, saying that the order is not in conformity with the Supreme Court decision. The High Court decision has been reversed by Supreme Court and therefore the order is erroneous. Here Supreme Court held ultimately against the challenge of that section 263 order that if the appeal against the High Court order is filed at the stage of completion of assessment or the decision of Supreme Court against the same order or some other High Court has come, then the order can be held to be erroneous, but at least at the time of assessment, that particular judgment might have been appealed against by the department. It can be, in other words, put it like two different scenarios. Suppose order has been passed considering the High Court decision. That High Court decision was, say, already pending before the Supreme Court at the time the order was passed. Then Supreme Court reverses that High Court decision and therefore CIT invokes its revisional jurisdiction. But in a scenario where Supreme Court has not reversed that High Court decision at the date of passing the High Court, at the time of passing the revision order, or one step further, at the time of passing of the assessment order, the particular High Court decision on which the decision that assessment order was based was not even appealed against. So, for example, on 25th of December 2015, AO passes an assessment order based on a Bombay High Court judgment. On 25th of December, department had not even challenged that Bombay High Court judgment before the Supreme Court. So, on the date of completion of assessment order, law as laid down by the jurisdictional High Court has been followed by the assessing officer, and therefore, in such a situation, then order cannot be said to be erroneous. That was the view of the Supreme Court in 263 ITR. What Supreme Court meant to say in this 263 ITR decision, that at the time of completion of the assessment, at least that particular decision on which AO had relied must have been appealed against by the department and pending before the Supreme Court. Then only Supreme Court CIT can invoke his revisional jurisdiction under section 263. Then there can be other parameters like a CBDT instruction versus decision of High Court. In other words, suppose in a particular scenario, there is a CBDT instruction which is against the assessee. However, there is a decision of High Court or Supreme Court. Now, it is a settled proposition that CBDT instruction or circulars are not binding on appellate authorities. So obviously not binding on High Court and Supreme Court. So in a particular decision, suppose High Court has struck down a particular CBDT instruction, and suppose the assessing officer relies on that High Court decision. However, in view of the new explanation to inserted, the third parameter of the explanation was that order is not passed in conformity with any direction or instruction given by the CBDT. As I explained earlier, the explanation 2 has 4 limbs. The first and second mainly deal with the inquiries not done by the AO. Third one deals with not in accordance with the instruction, and the fourth one deals with not in accordance with jurisdictional High Court or Supreme Court decision. Now, because these are not cumulative conditions, there could be a conflict in this particular scenario, that where a CBDT instruction is in favor of the assessee or against the assessee, whereas a decision of the High Court is in contrast to the CBDT instruction, whether such an order can be said to be erroneous because it is based on a High Court decision but not in accordance with CBDT instruction, or a vice versa. Before insertion of this explanation 2, Supreme Court in 243 ITR, Calcutta High Court in 353 ITR has held that because the CBDT instruction is not binding on High Court and Supreme Court, once a High Court or a Supreme Court strikes down a CBDT instruction or circular, any order passed by the assessing officer in conformity with that High Court decision cannot be considered as erroneous simply because it is not in accordance with the CBDT instruction. All such settled things will in fact lead to a new series of litigation because of the insertion of this explanation 2. Because after insertion of explanation 2, there can be an argument by the department in this example which I am giving, that though this order is in conformity with the decision of High Court or Supreme Court, but it is not in conformity with the CBDT instruction, and therefore third limb of explanation 2 is attracted, and therefore the section itself statutorily says that the order is prejudicial to the interest of revenue, and therefore 263 jurisdiction can be applied. That can be an argument. So we need to wait and watch how judiciary interprets explanation 2 in such contradicting scenario, especially the third and fourth limb can be simultaneously operating in the same situation. As far as the first and second limb of the explanation are concerned, inquiries, I'll deal at greater length on these aspects because there are so many existing decisions about inquiries, lack of inquiries, inadequate inquiries, etc. I'll deal with those aspects of explanation 2 a little later on and at a much greater length. Another issue that emerges from this explanation is that whether this explanation 2 will be prospective or a retrospective implication. Assuming it to be prospective, there could be one more further sub-question. Because the amendment is with effect from 1st of June 15, whether it will apply to the assessment order made prior to June 15 but revision order passed after June 15, or it will be restricted only to the revisional order which are passed, the assessment order which are passed after 1st June 15. Whenever any amendment comes, whether it is prospective or retrospective in nature, Generally, firstly, we go by the language of the bill, whether it is expressly stated to be retrospective or not. This explanation has been expressly inserted from 1st of June 2015, and therefore that leaves us to the doubt as to those statutorily made applicable from 1st of June 15, whether it can be applied to the pending assessment orders or the pending revision proceedings. In 367 ITR, Vatika Township case, which was in the context of surcharge leviable on search assessments, block assessment cases, Supreme Court had crystallized, in fact, Supreme Court has summarized the various guidelines for deciding when a particular amendment can be considered to be prospective or retrospective. Supreme Court tried to distinguish between an amendment made to remove hardship to the assessee versus amendment made to remove the hardship to the revenue. If an amendment is made to remove hardship to the assessee, it is considered to be retrospective, though expressly it might have been stated to be prospective. However, if an amendment is made to remove hardship to the revenue, it is generally considered to be prospective. But the another point of view is to be seen is whether it will be a more burdensome levy of tax on the assessee or it is a procedural amendment. This also will be a controversial question, because as far as explanation 2 is concerned, section 263 is concerned, there could be one argument that because this deals with the revision proceedings, it is a procedural section. However, another argument can be that because by invoking section 263, CIT will revise the order which has already been passed in favor of the assessee, it will lead to an extra burden of tax on the assessee, and therefore it should not be considered as retrospective. There was one decision of Mumbai Tribunal recently, Narayan Tatu Rane. In this decision, though they have not in fact held whether this explanation is retrospective or prospective in nature, because the Mumbai Tribunal said that this question whether this will be retrospective in application is a debatable issue. They did not decide it. However, they explain what will be the impact of this explanation, especially the first limb of the explanation. As we discussed earlier, the 4 parameters inserted in the explanation, the first limb says that the order is passed without making inquiries or verification which should have been made. The last 4 or 5 words, which should have been made, can be interpreted differently. Mumbai Tribunal in this particular decision has held that this particular expression, which should have been made, cannot be interpreted in a subjective manner, that the inquiry done by the AO need to be to the subjective satisfaction of the CIT. It is for the AO to apply his mind, and what is to be seen is whether a reasonable and prudent officer, what level of inquiry a reasonable and prudent officer would have made in the facts of a particular case. If such inquiries have been made by that particular officer, then even by invoking this particular explanation, CIT cannot say that the order is erroneous because some other inquiry should have been done. This particular sentence, which should have been made, has been interpreted by tribunal that which should have been made has to be in a reasonable and prudent manner. Otherwise, it will lead to an unended litigation. And in fact, in all the assessment proceedings, whatever level of inquiry is done by an assessing officer, it can be very simple for a CIT that even though you have verified say A, B, C, D, E, F, G different parameters, because you have not verified say a parameter H, and therefore you have not done a proper inquiry, and therefore the order is prejudicial. Such an interpretation will be a far-fetched interpretation of explanation 2, and in this particular decision Mumbai Tribunal has interpreted it in favor of the assessee, saying that this is not the intention of the legislation, that leading to an unintended litigation and never coming to an end of the assessment proceedings. So what is need to be seen in the context of explanation 2A is, limb A of explanation 2 is that the level of inquiry which a prudent and reasonable officer would have done in that particular facts of the case, if that has been done, then it cannot be considered as a case of no inquiry by the officer. These are just some general suggestions what care need to be taken to ensure that the orders passed in future are not caught by section 263 proceeding by the CIT, that the order should not be patently against any direction of CBDT or a jurisdictional High Court Supreme Court decision on the subject. Similarly, as far as possible, all the details in support of the claim should be placed on record even though they are not asked by the AO. Normal inquiry should be insisted upon even by the assessee himself. This can ensure that in future, by invoking this particular explanation, CIT does not unnecessarily create problems by setting aside the assessment saying of no inquiry case. Now we deal with certain other aspects of section 263 in a more detailed manner. The very first thing, section 263 deals with any order in any proceeding. This order need not be confined to an assessment order. What section 263 requires that CIT may call for and examine the record of any proceedings in which an order is passed by the assessing officer. So any order which is in any proceeding, though it is passed by assessing officer, it need not be an assessment order. When we go to section 264, we will see that the wording used in section 264 is order passed by any subordinate authority. So in section 264, it is an order passed by subordinate authority which may be AO, may not be an AO. However, section 263 deals with only orders passed by assessing officer, though it is not restricted to only assessment orders. Now one might wonder what other kind of order might be passed by an assessing officer. I have given few examples. It could be, for example, a rectification order under section 154. It could be an order say under section 195(2), order under section 197. Though these are not assessment orders, but these are orders passed by assessing officers, and these are orders passed in certain proceedings, and therefore section 263, the horizon is wide enough to cover such orders which are though not assessment orders, but these are orders passed in proceedings. So CIT can call for and examine the record of the proceedings in which such orders have been passed and invoke his revisional jurisdiction. Whether it applies to following orders like order giving effect to appellate orders, order under section 143 read with section 263. Recently, a very recent judgment of Allahabad High Court has touched upon this particular subject, that the assessment or refund form ITNS 150, that is income tax non-statutory form 150, is a part of the assessment order, and therefore it would be subject to revision under section 263. In the facts of the case, what had happened was, to give effect to the order of the appellate authority, assessing officer passed an order, that is ITNS 150, in which he calculated the refund which is due to the assessee. This particular part of ITNS 150, which is actually nothing but an order giving effect to an appellate order, in the opinion of the CIT, there were certain erroneous, that order was erroneous, that ITNS 150 was erroneous, and it was prejudicial to the interest of revenue, and therefore CIT invoked section 263. The plea of the assessee in challenge before against the 263 order was that this ITNS 150 is not an order, and therefore it cannot be subject matter of revision proceeding. However, Allahabad High Court has held that this ITNS 150 is a part of the assessment order. Order giving effect to the appellate orders are nothing but assessment orders, and therefore these are also subject matter of revision proceeding under section 263. Another set of controversy deals with intimation under section 143(1). Whether this can be subject matter of revision under section 263. Now the wording used in section 263 is that, first of all, it has to be an order. Secondly, the order should be a result of any proceeding. What is to be seen is whether 143(1) processing of return can be considered as a proceeding, and therefore the intimation which is passed, can it be subject matter of an revision proceeding, holding it to be an order. In Bombay High Court, Bombay High Court had an occasion to deal with this particular controversy on several occasions. In 249 ITR in Rajkumar Deepchand Phade, which was in fact an ex parte order, nobody had appeared on behalf of assessee. And in 266 ITR, Anderson Marine and Sons case, Bombay High Court held that intimation is same as order, because an intimation is deemed to be a notice of demand under section 156, and therefore all the consequences of the act will apply to an intimation under 143(1) also. Looking at section 143(1) intimation from this angle, it can be argued that even 143(1) intimation is an order, and therefore it can be revised by the commissioner under section 260. We also need to see the effect of Supreme Court decision in Rajesh Jhaveri stockbrokers and the recent decision of Zuari Estate Development. In these decisions, Supreme Court had to deal with, no doubt they were not in fact related to 263, they were related to section 147 change of opinion. Supreme Court had held in Rajesh Jhaveri 291 ITR and again reiterated in Zuari Estate that when an intimation is passed under 143(1), there is no opinion framed by the assessing officer, and therefore the plea of change of opinion in case of section 147 cannot be held against an intimation under 143(1). Taking clue of that, those particular decisions where Supreme Court has held that in 143(1) there is no opinion framed by the assessing officer. In my personal view, the earlier view of Bombay High Court in 249 ITR and 266 ITR, which was in the context of a different context and different provisions of 143(1), where there was during that period there were so many prima facie adjustments which the AO was empowered to make. Now the scope of 143(1) is very much narrowed down to only arithmetical errors and inaccurate claims which are apparent from the information found in the written, and the interpretation given by the Supreme Court that there is no opinion framed by the assessing officer. Therefore, in my personal view, in the present context, intimation which is passed by, which is processed by the either the AO or the centralized proceeding center cannot be considered as an order. Further, that processing of written cannot be considered to be a proceeding. A proceeding generally, though it is not defined in the Income Tax Act, but generally a proceeding would mean a scenario wherein first of all a personal opportunity of representing the case, that is natural justice is followed, and opportunity is provided to the assessee to make out his case. In the current scenario, once the return is filed, the return is processed electronically by the centralized processing center, and that does not envisage any kind of hearing to the assessee, any kind of natural justice in that processing of return, and therefore in my personal view, neither this processing can be considered to be a proceeding, nor the intimation thereafter issued can be considered to be an order. More so, relying on Supreme Court decision in 291 ITR and 373 ITR, my personal view is that intimation under 143(1) cannot be subject matter of revision under section 263. However, though I will take off 264 later on, but I must mention here also that in the context of 264 there could be a different school of thought, because 264 operates in a different scenario. We'll see it later on. There are so many decisions which support that in the context of 264 even an intimation can be subject matter of a revision under section 264, and rightly so, because the whole gamut of 264 is in a different scenario. Now coming to record. Any proceeding in which order has been passed by the assessing officer, CIT has the power to examine the record of such proceeding, and the explanation defines the record that record as is available at the time of examination by the CIT can be considered to be a record. In a landmark judgment of Shri Manjunatheshwar Packing Product 231 ITR, there was a valuation report which was submitted by departmental valuation officer, but that valuation report had come after the assessment. The plea of the assessee was that once the assessment is completed, when CIT is invoking this revisional jurisdiction, only that record which is available at the time of passing of the order should be examined. The valuation report which has come subsequent to passing of the assessment order is not part of the record, and therefore revision under 263 cannot be based on that report. That contention was negated by Supreme Court, was held in favor of the assessee, that the report which is available at the time of examination by the commissioner, that is at the time when he is invoking his revision jurisdiction under section 263, is a part of the record, and therefore based on that revision proceeding can be undertaken by the CIT. However, as far as not on the record part but directly on this valuation report aspect, I may mention that the amended section 142A, sorry, the new section which has been inserted 142A after the Supreme Court decision in case of Sargam Cinema, the 142A which was inserted and 2 years back which was later amended. The amended 142A provides for a time limit for giving a valuation report, and even section 153 has been amended that this particular time limit of obtaining the report from the departmental valuation cell will be excluded. Therefore, currently when in the course of an assessment proceeding reference is made to the valuation cell, there is no need for the officer to complete the assessment without waiting for the valuation report, because there are two things. First of all, 142A provides for a time limit of 6 months, and secondly, whatever time limit, say 4 months, 5 months, will be taken by the valuation cell for giving the valuation report, that time is excluded in the limitation under section 153, and therefore even though the assessment is in normal scenario is getting time barred, say on a particular day, excluding this period of reference to the valuation cell, there will be an extended time limit available to the AO, and therefore there is no need for an AO to pass an order without waiting for the report of the valuation officer. And therefore, perhaps extending this logic, now it can be argued that in a scenario where assessing officer passes an order without waiting for a report of the valuation cell, though section 142A read with section 153 provides for an extended time limit to the AO, if he passes an order without waiting for the report of the valuation cell, then a revision jurisdiction under section 263 based on that valuation report should not be allowed. There can be one more argument also, that the assessment order which has been passed without waiting for the report of the valuation cell is an order which is void ab initio, because it violates the principles of natural justice when a statutorily extended time limit is available and an order is passed without waiting for that report. So fundamental jurisprudence of natural justice stands violated. Now this Malabar Industrial Company Limited, this can perhaps be considered as the landmark judgment as far as section 263 is concerned. Very beautifully Supreme Court has held that the twin conditions for invoking 263 jurisdiction are that order should be prejudicial to the interest of revenue as well as order should be erroneous. These two are the cumulative conditions. Erroneous order insofar as it is prejudicial to the interest of the revenue. If one of the two is satisfied but the other one is not satisfied, so for example, an order is erroneous but it is not prejudicial to the interest of revenue, or vice versa, that it is prejudicial to the interest of revenue but it is not erroneous, then recourse cannot be held under section 263. Further, Supreme Court also deliberated on what is prejudicial to the interest of revenue. It held that it need not always be restricted to loss of tax. No doubt loss of tax or revenue will be a large part of indicative of prejudicial to the interest of revenue, but it is not necessarily restricted to only loss of tax. Even in a scenario where there is no loss of tax, but if certain principles are violated by the AO, and thereby it might have a say of impact in the assessment of say future years, or in some other cases it might have impact the interest of the revenue. Even in such cases, order can be said to be prejudicial to the interest of revenue. Supreme Court has held that if settled principles of law are not followed by the assessing officer, if the facts are not properly examined or evaluated by the assessing officer, these are the various facets of an order prejudicial to the interest of revenue. But the crux of that, simply because an order is prejudicial to the interest of revenue, revision proceeding cannot be invoked by the CIT. Both the conditions are cumulative in nature. CIT will have to demonstrate as to how the order is erroneous in nature. Otherwise, what will happen is, each and every case, wherever assessing officer takes one view of the matter, where two views are possible, and the view adopted by the assessing officer is in favor of the assessee, CIT might say that it is prejudicial to the interest of revenue. And in fact, that might be prejudicial to the interest of revenue, but that is not sufficient for invoking section 263 unless it is demonstrated that how the view followed by the assessing officer is erroneous. If two views are possible and he takes one view, then it cannot be said that the view adopted by the assessing officer is erroneous, and therefore 263 cannot be invoked in such a scenario. Thereafter, there has been a series of judgments on this particular aspect that were change of opinion, similar to the controversy which prevails under 147, when different courses are available and the officer takes one particular course, simply because CIT considers that the other view is better, it cannot be considered to be an erroneous order. It might be prejudicial to the interest of revenue, but it cannot be considered to be an erroneous order, and therefore revision cannot be upheld in such scenarios. Some discussion on what is erroneous as per dictionary meaning. Then in this 203 ITR, Bombay High Court in Gabriel India case, excuse me, sorry. This is also a very elaborate discussion on section 263, interpretation as to how it is to be ascertained whether an order is erroneous or prejudicial to the interest of revenue. A very practical situation is tackled in case of this particular judgment, which those who are appearing in assessment proceeding might have come across many times. See, what happens in the course of assessment, many times the assessing officer issues as a show cause notice, or he asks as a questionnaire, he raises a particular issue or a particular point. Then the assessee makes a submission on that particular point. If the assessing officer is satisfied on that particular point, he doesn't make any particular addition on that particular point. However, problem arises where the assessment order is not a speaking order. That is, from the assessment order you cannot make out that whether this particular question was asked, whether this particular thing has been examined by him or not. So if you view the assessment order, that particular issue is not at all referred to in that assessment order. Now CIT, invoking his revision jurisdiction under section 263, sets aside the assessment order that no verification has been done by the assessing officer. In this background, Bombay High Court, in this famous judgment, held that first of all, an order cannot be considered as erroneous simply because in the opinion of the commissioner, it should have been written more elaborately. If only a brief discussion is there in the order, that is also sufficient. Simply because CIT cannot invoke 263 simply on this pretext that AO has not, or the ITO or the AO has not passed an elaborate order on this particular point. Secondly, Bombay High Court has held that even if there could be a case of a scenario where the order is totally silent on a particular matter. However, if that question has been examined by the assessing officer and a conscious decision is taken by the assessing officer, and therefore no addition is not made on that particular issue, Simply because this discussion is not part of the assessment order, an order cannot be held to be an erroneous order. Because in fact, see, if we see the language itself, the opening part of section 263 is that CIT has been given power to call for and examine the record of the proceedings. And the record of the proceeding is not merely the assessment order. The record of the proceeding is the entire assessment record. Whatever notices, show cause notices, questionnaires, etc. issued by the assessee officer, replies filed by the assessee in response to those notices, these are all part of the record. And on the basis of examination of that entire record, CIT has to come to a conclusion whether the order is erroneous or not. Simply on the strength of the assessment order, CIT cannot come to a conclusion that the order is erroneous because a particular point has not been examined. Then in 341 ITR, full bench of Guwahati High Court, they gave various aspects of as to what is an erroneous order. I already narrated all these things: wrong assumption of facts, incorrect application of law, non-application of mind, not following natural justice, etc. This will be considered as erroneous order. Rajasthan High Court in Emery Stone Manufacturing held that where a correct provision of law has not been applied to a given facts of the case, that will also result into an erroneous order. Another aspect of section 263 is what is the extent of inquiry to be done by the AO, or to put it in other words, whether lack of inquiry and improper inquiry are one and the same thing. Now there are two facets to this question: the existing understanding, judicial understanding of this, lack of inquiry and improper inquiry, and the impact of the new explanation on this judicial understanding. Now the existing understanding, in so many judicial decisions, it is very well settled that lack of inquiry can invoke section 263, but an inadequate inquiry or insufficient inquiry cannot lead to section 263. For example, any claim made by the assessee, not at all examined by the assessing officer, and he has allowed that particular claim. After examining the record, CIT feels that the order is erroneous, that claim should not have been allowed, and there is no verification by the AO. This can be a fit case for section 263. However, in a scenario where a particular issue is examined by the AO, after examining it, he has taken one conscious decision on that and allowed the claim of the assessee. After examining the record of the case, CIT feels that AO has done only one particular parameter of the inquiry, but the other aspect or the other parameter of inquiry has not been done. So it's a case of inadequate inquiry or improper inquiry. There is a series of decisions which distinguishes these two aspects of section 263. Lack of inquiry, that is total absence of inquiry, section 263 can be invoked by the CIT, but in case of inadequate or insufficient inquiry, 263 cannot be invoked upon. We need to see what will be the effect of explanation to the first limb of the explanation, in fact even the second limb. The first limb of the explanation says that order has been passed by the assessing officer without inquiry or verification which should have been done. And the second limb of the explanation says that order has been passed allowing a claim, allowing a relief without verification of that claim. Now in these two aspects we need to see whether even a case of inadequate inquiry or insufficient inquiry can be covered by the newly inserted explanation. This will lead to unsettling the existing judicial understanding of section 263. In my humble interpretation, in my humble view, and as also the decision of Nara and Rane of Mumbai Tribunal, which we discussed a little bit earlier, where Mumbai Tribunal has also echoed it that for invoking explanation to the first limb, what should be seen is that the inquiry done by the AO, whether those inquiry were of such a nature as a reasonable or prudent officer might have done in that particular scenario. It cannot be a substitution of CIT's subjective satisfaction or a CIT's subjective mannerism of inquiry to be substituted in place of the AO's manner of inquiry. If a reasonable inquiry has been done by the AO, simply because some other parameters have not been done or not examined by the AO, or the manner of inquiry done by the AO was not appealing to the CIT, it cannot lead to a invoking of section 263. Otherwise, this will lead to an unending section 263 invocation. In fact, in all assessment orders, whatever level of inquiry is done by the AO, it will be very easy for a CIT to say that this particular aspect of inquiry or this particular type of inquiry has not been done, and therefore the order is erroneous and prejudicial to the interest of revenue. These are all the decisions of various high courts where this aspect of lack of inquiry, inadequate inquiry has been discussed. Recently, in case of this Rajmandir Estates, Calcutta High Court held that where there was only a small amount of authorized share capital, but a huge share premium collected by the assessee, and assessing officer had accepted that claim without inquiring into the aspect of this huge amount of share premium, which could have given a clue of as to examination of doubtness on the money laundering. CIT invoked the jurisdiction under section 263, which has been upheld by Calcutta High Court. But this was also a case of lack of inquiry where officer had not at all examined the huge share premium. And recently, assessee's SLP against that High Court ruling has been dismissed by Supreme Court. These are all other cases on lack of inquiry and inadequate inquiry. The impact of explanation to all we have discussed. Another recent decision of Bombay High Court in 390 ITR. In this case, this can in fact give a good example of different parameters of inquiry. In this case, assessee had received certain gifts. AO made a detailed inquiry about these gifts received as to the capacity of the donors, the documentation part, identity, creditworthiness, genuineness, everything was examined by the AO, and therefore he accepted the gift. However, CIT invoked section 263 revision powers on the ground that AO did not personally call for the donors and he did not examine the donors. As far as the documentation part was concerned, everything was examined by the officer in a detailed manner. However, because the donors were not personally examined, CIT invoked section 263. On a challenge to that 263 order, Tribunal quashed that 263 departmental appeal to Bombay High Court against that tribunal order, questioning section 263. Bombay High Court held that it is not that each and every case of section 68 that the donors or the person who has given that cash credit has to be examined. It is the application, it depends on the application of mind by the AO that based on the documentation submitted on the three parameters of identity, creditworthiness and genuineness, if the AO is satisfied, he need not go for any further inquiry. If he is not satisfied, if there is some lacuna in the documentation, that may lead to a further proper investigation into that. But if the identity, creditworthiness and genuineness is proved before the AO and AO is satisfied based on the documentation, then simply because the donors were not examined, order cannot be considered to be erroneous. Departmental SLP before this judgment has also been recently dismissed by the Supreme Court, reported in 244 Taxman 194. In fact, these decisions can perhaps give clue to the proposition which I gave, that what should be the interpretation of the word, an inquiry which should have been made, the wordings which have been in the newly inserted explanation too. If we take this example of Nirav Modi's case, here also the Bombay High Court said that it is the AO's satisfaction as to what level of inquiry he should have done. if he is satisfied with that identity, creditworthiness, genuineness of the donor is established by the documentation produced by the AO, produced by the assessee, AO need not personally call the donor and examine them. And therefore, this is a sufficient inquiry. Simply because CIT feels that personal examination should have been done, it will lead to, might be at best called as improper inquiry or insufficient inquiry, but that cannot lead to a section 263 revision proceeding. These are again cases related to inquiry made but not mentioned in assessment order based on Bombay High Court, Gabriel. There are so many other decisions of High Courts and tribunals. This one more decision of Calcutta High Court on the provision of section 263 again on share capital issue. Here in fact in a way it was as some other aspects of 147. Explanation 3 which has been inserted in section 147 which says that in the course of assessment, if the reassessment has been initiated say for X reason, but in the course of assessment some other thing has been observed, something comes to the knowledge of the assessing officer, then that other income which has escaped assessment can also be added in the scope of reassessment. Slightly connected with that, the facts of this case was that assessment was reopened to examine some professional fees which in the opinion of the AO had escaped assessment. AO was satisfied with that professional fees, but in the course of reassessment he did not examine issue of share capital at huge premium. Commissioner invoked revision proceeding saying that lack of proper inquiries as to issue of share capital. Here the plea of the assessee was that the reassessment was in fact not for share premium or share capital issue. The reopening was related to professional fees and therefore the scope of verification of the AO should have been restricted to it. However, Calcutta High Court held that 147 is wide enough. If any other thing comes to the knowledge of the officer, that is also part of the assessment proceeding, and therefore if that has not been properly examined by the assessing officer, CIT has rightly invoked 263 proceeding in that. Now another aspect in section 263 is that non-initiation of penalty proceeding. In all the assessment proceeding, if the AO is satisfied that there is either furnishing of inaccurate particulars or concealment of particulars of income, which now replaced with misreporting of income or underreporting of income, then he initiates penalty proceeding. And it is a settled proposition that penalty proceedings are different, distinct proceedings separate from assessment proceeding. Assessment proceeding leads to those concealment penalty proceedings. However, before initiating penalty proceeding, there has to be satisfaction of the AO as to whether there is concealment or inaccurate furnishing of particulars of income. So suppose in a scenario where assessing officer makes a particular addition in an assessment order, however it doesn't gives direction for initiating penalty proceeding, whether this part of the order of the assessing officer, non-initiation of penalty, can this be considered as erroneous and therefore prejudicial to the interest of revenue? As far as the second part is concerned, prejudicial to the interest of revenue, it can very well be said that because AO has not initiated penalty proceeding, this is prejudicial to the interest of revenue. However, as explained by Supreme Court in Malabar as well as Max Corp and so many other decisions, the twin condition, the second condition, order has to be erroneous. Non-initiation of penalty may be called as prejudicial to interest of revenue, but whether in all scenario it can be considered to be an erroneous, that thing is to be seen. There are so many decisions which I have listed a few in this: Delhi High Court, Rajasthan High Court, Guwahati High Court, Punjab and Haryana High Court. These decisions say that CIT cannot invoke 263 proceeding only on the ground that AO has not initiated penalty proceeding, because it is the AO's subjective satisfaction whether in the facts of a particular case, whether it is a fit case for concealment penalty or not. If AO is not satisfied, he will not initiate penalty proceeding. So CIT cannot substitute his wisdom or his personal satisfaction for initiation of penalty proceeding. However, there are certain contrary views by Madhya Pradesh High Court, Allahabad High Court, that if AO has not initiated penalty proceeding during the assessment proceeding, which in a particular factual scenario was a fit case for initiation of penalty proceeding, that assessment order can be set aside by CIT under section 263 and direct him to initiate penalty proceeding which he has earlier not initiated. A connected issue will be dropping of penalty. Now, because penalty is a separate proceeding, even a dropping of penalty would require a separate order to be passed. This order, as far as concealment penalty is concerned, order is passed by assessing officer only. So, suppose a penalty is initiated by an assessing officer. However, in the course of penalty proceeding, he is satisfied that it is not a fit case for levy of penalty, and therefore he drops the penalty proceeding by passing a separate order. This order, even though it is not an assessment order, as I told you in the initial part of my presentation, that section 263 is for all the orders which are passed by the assessing officer in the course of any proceeding. So they need not be an assessment, there need not be an assessment order, but there has to be a proceeding. So if there is a penalty proceeding which leads to an order, in that order penalty has been dropped, CIT feels that penalty should not have been dropped, and therefore CIT says that under section 263 both the conditions are fulfilled. There is a proceeding, there was an order, but because the order has been, because in that order penalty has been dropped, it is prejudicial to the interest of revenue and it is an erroneous order, and therefore that order dropping the penalty can be set aside by CIT under section 263. Excuse me. Sorry for the disturbance. These are certain other parameters, whether retrospective amendment after the assessment order is passed, if the law is amended, whether that can lead to 263. Obviously, talking about a situation that retrospective amendment, or say for example a subsequent judgment of High Court and Supreme Court, whether this can lead to be an erroneous order. Again, here also there are contradictions. Allahabad High Court has held that in that scenario revision is permissible. However, there are other decisions of Punjab and Haryana High Court which says that law should be seen as on the date when the AO has passed the order. If there an amendment takes place subsequent to the passing of the order, then revision cannot be done. In fact, in Max India case, it was a case where two assessing officer adopted one of the two possible views. Even at the time of the passing of the revision order, both views were available. When that order was set aside under section 263, that 263 order was challenged by the assessee. By the time hearing for that appeal against 263 order came, the law was amended and department took a plea that because now the law stands amended, the order passed by the AO is erroneous. Supreme Court held that when the revision order was passed, even at that time, two views were possible. Assessing officer had adopted one view with which CIT doesn't agree, then this is not a fit case for 263. Whether the order is erroneous or not is to be seen at the time the CIT is invoking his jurisdiction under section 263 and not at any subsequent appellate stage where the 263 is challenged. These are some other aspects of subsequent orders of High Court, Supreme Court. In fact, this GM method and all I already covered in my earlier part of my presentation. We have some limited time and we also to dwell upon 264. So I skip some of these slides. Yeah, one of this aspect, transfer pricing order. Now, as far as transfer pricing order of the TPO is concerned, it is not an order passed by an assessing officer. The definition of AO does not include TPO. TPO is a different officer. AO has a power to refer the matter to the TPO under section 92 CA. So the order which is passed by TPO, though it is part of any proceeding, but since it is not passed by AO, it cannot be subject matter of revision under section 263. We have an unreported decision of case of Tata Communication also in this particular aspect. Another aspect could be, suppose AO fails to refer the case where it is necessary as per CBDT instruction, whether the order can be held to be erroneous. In Ranbaxy Laboratories 345 ITR 193, Delhi High Court held that if there is a CBDT instruction, case falls into that particular parameter, but AO fails to refer, then that order is subject to revision. And in fact, the explanation which has been inserted, explanation 2, the third limb of the explanation categorically says that if the order is not passed in accordance with any instruction of CBDT, that order is erroneous in nature. Another aspect, in Mumbai Tribunal SRC, there AO had simply followed, no doubt obviously he has to follow the TPO's order which is binding on the AO. So once AO has followed that order and that ALP was computed, but CIT said that their order is erroneous, Mumbai Tribunal said that that cannot be done. What AO has done is only followed the TPO's order which is binding on him, and once the TPO's binding order is followed by him, that order cannot be considered to be an erroneous order. Doctrine of merger. Now this was something which I was telling in the initial introduction of section 263. Clause C of explanation to subsection 1, it says that any issue which is considered and decided by CIT appeal, that cannot be subject matter of revision. The reasoning or the logic, as I explained earlier, CIT appeal and CIT, because they are at the same hierarchy of income tax authorities, and therefore order of one cannot be subject matter of review by the other person. So once you challenge the assessment order before CIT appeal and CIT appeal has considered and decided that, that thing cannot be subject matter of revision under section 263. However, the wordings of clause C suggest only a partial merger. Doctrine of merger says that when any higher authority has reviewed any order of a lower authority, the order of lower authority gets merged into the order of the higher authority. So if an assessment order is subject matter of CIT appeal, once CIT appeal passes an order, the order of AO gets merged into CIT appeal's order, and therefore it no longer remains only an assessment order passed by an AO. It becomes an order passed by CIT appeal. Once it becomes an order passed by CIT appeal, we need to see whether it can be open for review by commissioner who is at the same level at CIT appeal. So doctrine of merger suggests that once an order gets merged into the other order or order of higher authority, we need to further see whether it is a doctrine of partial merger or it is a doctrine of total merger. As far as section 263 is concerned, it is only a doctrine of partial merger, because the language of clause C explanation to subsection 1, it suggests that the issues which have been considered and decided by CIT appeal cannot be subject matter of revision. Other issues which have not been considered and decided by CIT appeal can be subject matter of revision, and therefore the order of AO gets merged into CIT appeal order only to the extent of the issues which has been considered and decided by CIT appeal. This is the doctrine of partial merger. A very good example is given in this 282 ITR 457 Bombay High Court. In this case, assessee claimed a deduction under the old section 35B of some 8.9 lakhs. AO allowed a deduction of 5.63 lakhs. For the balance amount, assessee filed appeal before CIT appeal, which was dismissed by CIT appeal. Later, CIT invoked revision jurisdiction in respect of that 5.63 lakh, which was earlier allowed by the AO, but according to CIT, it was allowed without verifying the details, and therefore it has been wrongly allowed. So question was whether this can be considered to be an issue considered and decided by CIT appeal. Bombay High Court has held that what CIT appeal examined was the balance claim which was not allowed by the officer. Out of 8.9 lakhs, you had already allowed 5.63 lakhs. Only balance 3.25 lakhs or something was subject matter of appeal before CIT appeal. What CIT sought to invoke under section 263 was wrong allowance of 5.63 lakh, and therefore this was not subject matter of appeal to CIT appeal, and in this matter 263 revision is possible. In another similar scenario, Gujarat High Court in 248 ITR had an occasion in similar cases. In this case, investment allowance was claimed on some of the items of fixed asset was allowed by the AO. Remaining items which was not allowed, assessing went to CIT appeal. CIT appeal allowed on the remaining items. Now the items which were originally allowed by the AO itself, these were proposed revision by the CIT. Gujarat High Court held that this revision is not possible since the order of AO has merged with the order of CIT appeal. These are also some other sets of decision. When it is the same subject matter, then revision is not possible. If it's a different subject matter other than subject issue examined by CIT appeal, then revision is possible. Coming to the time limit, as I explained, 2 years from the end of the year in which the order is passed. This is the time limit for passing the order. And as I explained to you earlier, there is no separate time limit for issue of notice, etc. However, the section requires that opportunity of being heard must be given. Now, the earlier view on this particular point was that the 263 show cause notice must mention the areas of revision. It must also mention the reason as to why the order is treated as erroneous, and then the scope of revision has to be restricted to those points. For example, CIT issues section 263 notice for a particular matter A. Then in the course of revision, he has to restrict it to matter A only. He cannot decide some other matter B and C which was not the part of a show cause notice. Also, the grounds of revision has to be the same which were there in the show cause notice. For example, in the show cause notice, CIT says that the order is erroneous because AO has not properly verified it. However, in the order, he directly disallows that item. Or take a reverse case where the show cause notice mentions that a particular expenditure has been wrongly allowed by the AO. However, in the final order, CIT comes to a conclusion that this has not been properly verified by the AO. Now, these are two different things. Wrong claim, wrongly allowed, and improper verification. And therefore, the earlier judicial discipline was that scope of 263 has to be restricted to the show cause notice. However, recently, in 384 ITR 200, a case has been reported, CIT versus Amitabh Bachchan, in which Supreme Court has laid down 3 propositions. First of all, it says that no specific show cause notice is required detailing specific grounds of proposed revision. In a way, the implication of this decision is that 263 will not be similar to a 148 or 147 proceeding. Because in case of 147, what happens? Once the 148 notice is issued, assessee has to submit a return. After submitting the return, he can ask for the reasons and they are duty bound to give the reasons. Thereafter, assessee can challenge those reasons, etc. etc. There is a settled procedure for 147. Earlier, even 263 was in many cases interpreted in the similar manner that there has to be a specific show cause notice and the scope of 263 has to be restricted to only those points which were covered in that show cause notice. However, in Amitabh Bachchan case, Supreme Court held that no specific show cause notice detailing the grounds of revision is required for section 263. Secondly, even if suppose he has already issued a show cause notice, but his final order need not be restricted to only those issues which were mentioned in the show cause notice. Only thing required in section 263, according to Supreme Court, is before passing the revision order, an opportunity of being heard should be given to the assessee. That means, in simple terms, what has been laid down with Supreme Court in Amitabh Bachchan's case is that there could be a general show cause notice issued by CIT for initiating section 263 without giving the grounds of proposed revision. However, before passing any final order of revision, he has to tell those grounds to the assessee, give him an opportunity of being heard. A second scenario, a show cause notice already issued by CIT, but suppose it is on ground A, ground B, etc. But in the course of revision proceeding, if CIT wants to revise the order with respect to other parameters, say ground C, ground D, etc., he need not restrict it to only ground A and B which were there in the show cause notice. He can also cover up the other ground C, ground D, etc. However, before passing the final revision order, he is to give an opportunity of being heard to the assessee. Then this time limit of 2 years from when to be counted, especially in a scenario where there is an original assessment order and there is suppose a 147 also. So there is 143.3 order and say 147 order. Revision time limit whether to be counted from 143.3 order or 147 order. In 293 ITR, Alexandran Finance Limited's case, Supreme Court held that time limit is to be reckoned from that order which is subject matter of revision. If the subject matter of revision is a particular issue which was there in the original assessment order, then the time limit is to be counted from the date of the original assessment order. However, if the ground of revision is a point which was subject matter of reassessment order under 147, then the time limit is to be computed from the reassessment order and not from the original order. Now the last part of section 263, what are the remedies available and subsequent actions? Appeal can be filed to ITAT against the order of the CIT under section 263. So once CIT passes the revision order under section 263, there cannot be an appeal to CIT appeal because CIT and CIT appeal are at the same hierarchy. So the first appeal against 263 directly goes to ITAT. If this appeal is not filed to ITAT, then 263 order becomes final. AO will pass an order under section 143 read with section 263 as per the directions given by section 263. Time limit for this order is 9 months from the end of the financial year. Current Finance Act, it is extended to 12 months in case of 263 order which will be passed on or after 1st of April 2019. Can assessee seek a new benefit in such assessment? Now section 263, in fact, they are for the benefit of the revenue. An order which is prejudicial to the interest of revenue, their order will be set aside or enhanced in a 263 proceeding, and therefore generally speaking, assessee cannot make a fresh claim in such new assessment. However, in another decision which we will take up in section 264, Supreme Court has held that in the course of 263, assessee can make any claim relevant to that particular issue, and CIT can allow also that particular claim, but the final outcome of section 263, the net result has to be in favor of the assessee. And similarly, even in case of 264, CIT can disallow any claim of the assessee. However, the final order of section 264 should be in favor of the assessee. Now, the order passed by CIT under section 263, the appeal lies to the tribunal. There is a slight catch in this. Many cases, what happens is, suppose under section 263 order, there could be a total remand or a partial remand. Total remand in the sense that CIT gives a direction to the AO that this particular claim has not been verified, has not been inquired upon, and therefore this particular claim has to be examined by the AO afresh, and therefore he sets aside the assessment order. This is known as the total remand. Now in this total remand, CIT is not giving any outcome or any opinion as to whether that particular claim is allowable or not. The grievance to CIT is only that he says that AO has not examined, and therefore he sets aside the assessment order de novo to the AO that you examine it. This is known as a total remand. In such a scenario, there are two courses available to the assessee. he can challenge the 263 order to the tribunal, agreed by setting aside of that order. If he doesn't challenge the 263 order to the tribunal, the consequential order which the assessing officer is going to pass under 143.3, because it is a total remand, it's a fresh assessment order. It is the AO's opinion whether the claim is allowable or not, and therefore if the AO subsequently disallows the particular claim, assessee can also file an appeal to the CIT appeal against the assessment order passed by the AO. This cannot be considered as an appeal against 263 order, because in 263 order CIT has already only set aside the assessment order. Whether the claim is allowable or not is not the decision of the CIT. It is the decision of the AO, and therefore it can be challenged against before the CIT appeal. However, there can be a scenario of partial remand in the sense that CIT in the course of 263 order, he himself verifies it and he comes to a conclusion that this expenditure is not allowable. Any expenditure or any claim is not allowable. Now, to give effect to that section 263 order, AO will pass a consequential order. Now, in this consequential order, when AO is making that particular addition, this consequential order cannot be appealed against directly to CIT appeal, because it is not AO's wisdom or AO's judgment that the claim is to be disallowed. It was CIT's decision under section 263 that this particular claim is not allowable, and if an assessee is agreed by this particular action of CIT, proper course is for him to go to the tribunal. If he is not agreed by CIT's direction of adding that particular amount and he doesn't go to the tribunal, he cannot be agreed by AO's act of merely adding as per the direction of the CIT. So the crux is to be seen whenever a 263 order comes, it has to be minutely examined whether it is a case of a total remand or a partial remand. If it is a case of a total remand, assessee can challenge 263 before the tribunal, or he can also challenge the consequential assessment order passed by the AO before the CIT. However, if it's a case of a partial remand, the only course open to the assessee is to challenge the 263 order before the tribunal. Now, this is a table which distinguishes section 263 revision with the reassessment proceeding, because both go against the assessee. I have compared this in what scenario they can apply. Both are weapons in the hands of the department to tax the income which is escaped assessment or which excessive relief, etc., any claim by the assessee. Coming to the second part of our presentation, revision proceedings under section 264. As I explained in the introductory part, section 264 is titled as revision of other orders. Other order would mean any order to which section 263 does not apply, other than an order to which 263 applies, or in simplest word, an order which is not prejudicial to the interest of revenue. So if it is not prejudicial to the interest of revenue, naturally it will be prejudicial to the interest of the assessee. So assessee is agreed by that order. Now if an assessee is agreed by that order, one course available to the assessee could be to file an appeal before CIT appeal under section 246A. Another course open to the assessee is making a revision petition under section 264. So what section 264 gives is that principal CIT or CIT, he may either act suo motu or on application made by the assessee. Any order passed by an authority which is subordinate to the principal CIT or CIT. So very wide coverage of section 264. Any order passed by any subordinate authority, but that order should be against the assessee. If an order is in favor of the assessee, it will be prejudicial to the interest of the revenue. Once it is prejudicial to the interest of the revenue, it will fall in the domain of section 263. So any order which is against the assessee, that can be revised by using his administrative power by the CIT under section 264. This administrative power of revision in favor of assessee can be exercised either suo motu or on application by the assessee. CIT may call for the record of the proceeding in which order has already been passed. So similar to 263, he cannot call for the record of a pending proceeding. Once the proceeding is completed, order has been passed, CIT can call and examine the record. He may make such inquiry or cause such inquiry to be made as he deems necessary. This also is similar to section 263. Finally, after examining the record, after conducting if any inquiry is required, he may pass such order as he thinks fit. However, this order should not be an order prejudicial to the assessee, because the input order, the incoming order, the order which is subject matter of revision, is already against the assessee. The outcome cannot be against the assessee. So as explained earlier, 263 and 264 operate in altogether different field. The input of 263 is against the department and therefore the output will be in favor of the department. Input of 264 is against the assessee and therefore the output cannot be against the assessee, output will be in favor of the assessee. However, an order declining to interfere cannot be considered as an order prejudicial to the assessee. In a way, it could mean that, for example, assessee makes a revision petition under section 264 and CIT examines the record, and according to him, whatever order has already been passed is proper order and therefore CIT declines to interfere. Assessee cannot take a plea that this is declining to interfere is against my interest and such an order cannot be passed under section 264. So this cannot be considered as prejudicial to the assessee, and therefore whenever a revision petition is filed by the assessee under section 264, CIT can either decline to interfere for of course valid reasons, or he may exercise his jurisdiction and pass an order which should be in favor of the assessee. Time limit. Now there are two kinds of time limit, because there are two kinds of 264. One is suo motu and another is an application by the assessee. If it is a suo motu action, Commissioner must act within 1 year from the date of order sought to be revised. This time limit has to be minutely seen, because generally the time limits of 1 year or whatever time limits are provided, normally they are from the end of the financial year in which the order is passed. But here the time limit for suo motu revision is only 1 year from the date of the order sought to be revised and not from the end of the year. However, as far as assessee is concerned, if he makes an application, then the time limit is 1 year from the date on which the order was communicated to him. Once he makes an application, CIT has to pass an order within 1 year from the end of the financial year in which application is made. So within 1 year from the date of the order, CIT can suo motu exercise 264 power. Within 1 year from the receipt of the order, assessee can apply for revision. If there is a delay by the assessee for reasonable causes, CIT has power to condone those delays. Once the assessee has filed a revision application within this time limit or within the delay which is condoned by the CIT, then he has to pass an order within 1 year from the end of the year in which revision application is made. Exclusion of time limit in counting the time limit, these are similar to section 263, time taken in giving opportunity of being reheard and time during which there is an order or injunction of any court. Similarly, if the revision is to be done in consequence of to give effect to any appellate order of High Court, Supreme Court, etc., then this time limit doesn't apply. Orders that cannot be revised. If appeal is possible before CIT appeal or ITAT and the time for filing the same has not expired, then order cannot be subject matter of revision. As can be seen from the scheme of this revision, as well as from the scheme of assessment and appeal which I explained earlier, once an assessment order is passed, suppose that assessment order is against the assessee, so assessee has an option to file an appeal before CIT appeal. Assessee has also an option to file a revision petition to CIT under section 264. However, law cannot allow a parallel facility to the assessee to try both the channels, and therefore what section 264(4) provides that if an order is appealable before CIT appeal and the time for filing that appeal is available, then you cannot make a revision application to the CIT. If you want to still make a revision application to the CIT, you will have to waive the right of an appeal. Now, as we all are aware, the time for filing appeal before CIT appeal is only 30 days from the date of receipt of notice of demand, whereas the time for filing revision application is 1 year. And therefore, practically what we can say is, suppose after receipt of the order of assessment order, in the first 30 days, assessee has to decide whether he goes for revision or he goes for appeal. If he goes for appeal, the revision petition is not maintainable in those 30 days. If he waives the right of filing an appeal, he can make an revision petition under section 260. Once those 30 days are over, then also he can file an appeal subject to condonation. But if there are no reasonable causes for the delay in filing of an appeal, and assessee fears that delay might not be condoned by the CIT appeal, already 30 days has expired and there are no reasonable causes, then within 1 year, assessee can take this route and invoke the jurisdiction of CIT under section 264. So appeal and revision are alternate remedies. Here also what is to be seen is there is a doctrine of total merger. As we just saw in section 263, the doctrine of partial merger is there, which would mean that if one particular issue is before CIT appeal, 263 can very well be invoked for other particular matter. However, as far as 264 is concerned, the total order is to be seen in toto. Once an assessee files an appeal before CIT appeal for any particular issue, for example, there are two disallowances made by an assessing officer, disallowance A and disallowance B. Assessee files an appeal before CIT appeal only against A, and he doesn't file an appeal against disallowance B. And now he makes a revision petition to CIT under section 264 for disallowance B. So from the same order, for issue A, he is going to CIT appeal. For issue B, he is going to CIT. Such a thing is not permissible in the scheme of revision under section 264 because section 264(4) requires a doctrine of total merger. Once an order is appealable before CIT appeal and you have filed an appeal before CIT appeal, whether or not the issue is same or different, from the same order you cannot go to CIT for section 264. If assessee makes an application, there is a filing fees of ₹500. There is no prescribed form. Similar to section 246 appeal, we have form 35 for filing appeal to CIT appeal. But for this revision petition, it can be in the form of a simple letter with supporting documents. Now the outcome of section 264, if CIT accepts the proposition given by the assessee and makes a revision, good enough. If CIT declines to interfere, order passed by CIT under section 264 is not appealable before tribunal. So the only remedy available would be a writ petition in High Court if the order is not accordance with law, or if the CIT doesn't pass the order within the prescribed time limit. Certain fundamental principles which we can touch upon in this limited time. Because this is an administrative power given to the CIT and not an appellate power. Whenever assessee makes an application to the CIT, he has to be very cautious from one particular angle, because the order of CIT under section 264 is final. There is no further appeal to the tribunal. Only course open is a writ petition before High Court. Looking at another angle, since it's a final order under section 264, it's not an arbitrary power. It has to be exercised judicially in an objective manner, as has been laid down in so many decisions. In simple words, if a CIT is rejecting a revision petition under section 264, there has to be sound reasons for the CIT to reject the petition. It cannot be an arbitrary manner, in a casual manner. Whenever assessee is seeking some relief to which he is entitled to as per law, CIT cannot dismiss the revision petition arbitrarily. The order passed by CIT has to be a speaking order. It shall not be influenced by non-cooperative conduct of the assessee, purely on the principles of application of law on the facts of the case, on the merits of the case, CIT has to decide his powers under section 264. Principles of natural justice ought to be followed, else it can be challenged by way of writ petition. Condemnation of delay, this we have already seen. If the assessee doesn't make an application within 1 year, if there are reasonable causes, he can make application for condemnation delay. And if there are good reasons, CIT has to condone the delay. Another important aspect, intimation under section 143(1). Now, though section 264 uses the word orders, however, it doesn't first of all use the word order in any proceedings. Any order passed by any subordinate authority is subject matter of revision, and therefore even an intimation under 143(1) can be considered to be an order. In fact, Bombay High Court, in the context of even 263, has held that intimation is an order. So even that support can be taken. If it is an order for the purpose of section 263, it is also an order for the purpose of section 264. 263 requires an order as well as a proceeding. As we discussed earlier, 143(1) processing of return is not a proceeding. But that is not the requirement under section 264. So the case becomes more stronger in case of section 264. 143(1), if any adjustment is made, it will result into a demand. 143(1) intimation itself is deemed to be a notice of demand. And the intention of section 264 is to provide relief to those assessees who might have otherwise missed the bus of filing an appeal to CIT appeal within 30 days. And therefore, if a petition is made by an assessee for revision even of an intimation under section 143(1), it can be accepted by CIT under section 246, under section 264, because the intention of 264 is furtherance of justice, giving relief to the assessee. There are so many decisions of Kerala High Court, Delhi High Court. In fact, they have relied on a very old circular of severity of the year 1955, where severity has opined that assessing officer should not take benefit of the lack of knowledge or understanding on the part of the assessee. If a particular claim to which assessee is entitled to, and even though he is not aware of it, it is the duty of the assessing officer to give that relief to the assessee. Taking clue from that circular, Kerala High Court, Delhi High Court, even in the recent judgment, they have held that if an assessee makes, for example, a wrong claim itself in the return, now proper course definitely would be filing a revised return under 139(5). But suppose assessee misses that particular bus also, a claim to which he is entitled to. For example, in this particular facts of the case, there was a long-term capital gain as well as capital loss which was set off. And because capital gain was set off against capital loss, assessee did not claim relief under section 54F in the original return. Revised return time limit has also lapsed. In the course of assessment, set off claimed was not permitted, and therefore assessee made a claim for then 54F, which was rejected by the AO, saying that it is not made either in the original return or in the revised return. However, the AO could have held that a claim to which an assessee is entitled to, if it is not in the return of income or in the revised return of income, even that can be accepted by CIT under section 264 proceeding. Fresh evidence, because section 264 in a way we are comparing, or it can be compared to section 246A, where it's an alternate proceeding, alternate remedy available to the assessee, whether fresh evidence could be admissible. Now, in the context of section 246A, the law itself requires that, first of all, assessee as a matter of right cannot produce any evidence which was not produced before the assessing officer. However, Rule 46 provides that in 4 situations in the context of appeal proceedings, assessee can produce additional evidence. Taking clue from all those things and the intention of section 264, there are so many decisions which support the view that even fresh evidence to support the claim of the assessee can be filed in the course of revision application under section 264. However, Andhra Pradesh High Court in 298 ITR has given an adverse view that additional evidence cannot be filed in the context of 264 application. There are so many decisions which support, majority of the decisions support the view that even if there are mistakes in the return, assessee can make revision application under section 264. The last aspect, the doctrine of merger, which we are discussing. Once an order is appealable before CIT appeal, and that appeal has been, either the right of appeal has been waived, then only you can file a revision application, or the time limit has lapsed. So the doctrine of merger says that it's an alternate remedy. Assessee cannot simultaneously pursue both the remedies, one an appeal before the CIT and another revision petition before the CIT. So the incidental issues arises. Suppose that an appeal has been filed before CIT appeal, but appeal is not decided on merits, but it is dismissed either for time bar or for non-payment of tax under 249(4), the non-disputed tax which the assessee is supposed to pay before the appeal, or the appeal is withdrawn by the assessee himself. Whether in such situation, can the order be said to be subject matter of appeal? If it can be said to be subject matter of appeal, 264 doors will be closed for the assessee. If it is not considered to be subject matter of appeal, 264 doors will be open. So Kerala High Court as well as Madras High Court has held that appeal means an effective appeal, and an effective appeal would imply only an appeal which has been decided on merits. So if an appeal is dismissed in limine, for example, where the delay has not been condoned, or the assessee has withdrawn that appeal, in such situation, because appeal has not been decided on merits, predominantly the decision favor the situation that then order cannot be said to be subject matter of an appeal, and therefore revision petition is maintainable before CIT under section 264. A reverse way of this thing, suppose an assessee makes a revision petition and that revision petition is dismissed, and now he files an appeal, naturally with an application for condonation of delay. So can appeal be filed in a case where revision petition is dismissed, in two situations, whether either revision is dismissed on merits or whether the revision itself is dismissed on being delayed? Madras High Court has held that there is no bar under appeal provision converse to revision provision, because see, section 264 specifically provides that if an order is subject matter of appeal, it cannot be subject matter of revision. But there is no such parallel provision in section 246A that if an order is subject matter of revision under 264, it cannot be appealable under section 246A. However, Orissa High Court has given a contrary view that once you have made a revision application, you cannot make an appeal under section 246A. No prejudice to assessee, this we have already discussed. Subsequent orders of AO. In the context of 264, what the law requires is that wide powers given to the CIT that he can pass such order as he thinks fit. Only condition, limitation to his powers are that he cannot pass an order which is prejudicial to the interest of the assessee. And therefore, suppose he sets aside an assessment to the assessing officer for a de novo proceeding. In the consequential assessment, he has to confine himself only to the direction given in the order of CIT. It cannot be a totally new proceeding, so he cannot examine new things in that. And secondly, since CIT is constrained not to pass a prejudicial order against the assessee, even the AO will be constrained in such scenario as not to pass something, a relief which is already given. He cannot take away that relief in this consequential assessment. For example, in the original assessment proceeding, he has allowed a relief, a particular X relief has been allowed. Y was not allowed. Now the assessee makes a revision petition under section 264, and for examining this Y claim, CIT sets aside to the assessing officer for examining the claim. Now in this consequential proceeding, AO cannot come back to re-verification of the X which is already allowed, because if a relief cannot be taken away by CIT, the same cannot be done by the assessing officer also. Lastly, as we compared 263 with the reassessment under 147, this 264 I have summarized a table we comparing with appeal proceeding, how it will, because it's an alternate remedy, The various parameters on which I have compared is who can begin the proceeding. 246A naturally first appeal only by the assessee, but 264 either it can be suo motu or by the assessee. Adjudicating authority in appeal is CIT appeal. Here it is principal CIT or CIT. Possible orders, appealable orders, there is a long list given in section 246A, which is an exhaustive list. Only those orders are appealable. As far as 264 is concerned, order passed by any subordinate authority. Time limit for appeal is 30 days. Here the time limit is 1 year. Filing fees for 250 to 1000 rupees. Their filing fees 500 rupees. Possible results in an appeal against an assessment or as well as a penalty. CIT appeal has gotten power of enhancement. This is a very peculiar, in fact, the two important comparison of 246 and 264 is, one is this possible result. In CIT appeal has a power of enhancement. However, in 264 CIT has got no power of enhancement because he cannot pass any order which is prejudicial to the assessee. And the other distinguishment is the last one, remedy against the order. Against the CIT appeal, you have a remedy of going to ITAT, and thereafter if there is a substantial question of law, you can go to High Court, Supreme Court in the normal appellate level. However, the remedy against 264, if it dismisses, is only a writ petition before High Court, or no appeal as to the tribunal against the 264 order. So if you have any questions on this, you can type in chat box. You can type in the chat box. We can answer the queries. Yeah, thank you very much.
Friends, you all will agree. Devendra has taken us through the provisions of 263 and 264 in a detailed manner, giving us all the aspects and taken out time to make a fantastic presentation of the entire process. I, on behalf of the chamber and on all of your behalf, thank him. Thank you very much.